The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading.
For over 95 years, we've set the bar. Power, we restored it. Protection, we reinvented it. Record yields, we redefined it. If there's one thing we know at FS, it's that just because something hasn't been done, doesn't mean it can't be done. We're never satisfied unless we take your farming operation to the next level. Run your equipment at peak efficiency and bust the bins this season. Visit fssystem.com.
Well, as we near the end of the year, we are getting perspectives on where these markets stand, where the ag economy stands, what's in front of us as we officially roll that calendar over to 2024. Joining us for a conversation about all that and more here today, we welcome back to the program Chad Hart, economist and professor at Iowa State University. And Chad, it is always good to catch up with you. Thanks so much for joining us. Merry Christmas. Happy New Year to you and yours, Chad.
Merry Christmas and Happy New Year to you as well, Jesse. Glad to be here.
Well, let's start off and just take a look and take a big picture perspective of this market trade as we are wrapping up the year. I'll start on the grain side. Largely, we kind of entered that holiday mode around the 15th of December. Trade's gotten thin, volume's gotten lower. A lot of folks kind of go to the sidelines during this period, which can lead to some added volatility. But overall, it feels like these markets have they're just kind of drifting right now. Your thoughts as you kind of look at things, does it largely just feel like the holiday mode is settled in here and we probably won't see much in the way of big activity until we go to 2024?
Well, that's the deal. Without anything else sort of happening within the marketplace, I think you're right. The idea is we're sort of drifting into 2024, waiting to see how some certain market factors develop over time. The markets have been concentrating on South American weather, but it's been hit and miss. Every time we look at the forecast, it seems to flip. And so the markets have sort of, they bounced around, but the idea is when you look at the sort of longer term trend, no, we've been sort of just treading water here now for the past couple of months because there hasn't been really any one factor to truly lead a charge either up or down.
Well, you brought up South American weather, and it seems like that's really the only major story I could point to here that traders are going to be watching through this holiday period and into the early part of January. And, we've seen the forecasts that are calling for these decent rains to continue through the end of the year, really in Brazil and into the early part of January. I think it's going to be for a lot of traders if these rains do in fact verify, and then once we get that calendar into January, that's when we could start really trading that South American weather news again. Do you think, Chad?
I think so, and I think you're right. The idea is that's going to be the biggest thing that we're going to watch over the next few weeks here. But I'll put something else behind it as well. I mean, the idea is I think we want to look at that in concert with our weekly export sales. Does the trials and tribulations of weather down there for the South American crop lead to some additional export sales over the next few weeks? Because let's face it, for the U.S. markets, we tend to need to dominate the global trade atmosphere as we move from our harvest basically into February. And so this is that period of time when we tend to gain some of that export sales share back. Can we do that given the weather problems that they're having?
With some of the weather challenges, if there's a delay to safrinha corn planting, which is very much a possibility right now, your thoughts on that export side here? I wonder, there's two things here for my thought here, Chad. One, we have a lot of corn in the world, so I wonder if a safrinha crop issue could really have a big dent on the market. But in turn with that, to your point about exports, if we do see delays with safrinha, could that lead to more corn exports here from the U.S.? Your thoughts on taking it from that view, possibly?
Yeah. So when I'm looking at this, I would agree that that's something I am watching, is not necessarily just the damage that's happening to the crops in the ground right now for South America, but yeah, looking at that second crop corn and how far does this delay that possible planting? What does that mean in terms of yield possibilities down there? And yeah, you're right that, as far as global supplies of corn, we're sitting on the biggest, corn production number we've ever had when we look at the 2023 crop. But the idea is any sort of limitation, especially in South Americans' production, does lead to some opportunities for our exports. And when you look at the export pace we've had over the past, well, basically 2-3 months within the corn market, we've been slowly building back up to reach what I'm going to call typical levels. When I looked at this week's report, for example, we're running just under the 5-year average. So that's a recovery from where we were at a year ago at this time. It's still not as high as we've experienced recently, but it's not a bad place to be when we're looking for that export, those export levels to support prices as we move into 24.
I wonder too, especially for U.S. farmers on the corn side. We talked about this; those bin doors are kind of shut here until 2024. It feels like, but there's still a lot of carry in this market. It feels like there's a lot of opportunity for corn sales here potentially, depending on any sort of rally we may or may not see here, Chad.
Well, that's the deal. I'd say what I'm watching for is more, you're going to find those entities, those feed mills, those ethanol plants where they're going to have spot shortages, where they're going to pop the basis up and offer up an opportunity that, doesn't last long, but offers some good sales out there for folks, especially as we work through the next, say, couple of months here. The idea is that while a lot of folks, the bin door has been closed and won't open for quite some time, if you do have the ability to pop that bin open and you do have that ethanol plant or feed mill nearby, no, you're still going to be moving a little bit of corn through the holidays.
How about soybeans? Any thoughts there? Are we worried about some of the chart damage that's been done in the soy complex overall here as of late, Chad?
We're worried about it, but at the same time, too, I'll point back to, when you think about the corn situation, we're sitting with large supplies and stock levels here in the U.S. and large global supplies. When I look at soybeans, yeah, we've got large global supplies, but the U.S. market is still really tight. We've got limited stocks when we're looking there, and so it does help provide a better floor underneath that market than we've got on the corn side. And the same sort of thing, I'm looking at that export potential as we move forward again. If South America, especially Brazil, has problems, that usually opens up some opportunities for U.S. sales as we get into January and February.
We are having a conversation today with Chad Hart, economist, professor at Iowa State University. Chad, I want to talk a little bit just about the broad ag economy in general. I know it's meeting season for you, and you've been out to touring around Iowa, a lot of ISU extension series, forums, et cetera, and having a lot of conversations with folks, kind of looking at the commodity market outlook and just the ag economy outlook in general. What's your thoughts on this overall ag economy as we move into 2024? Is it doom and gloom? Do we have a bright spot out here? What are you thinking, Chad?
Well, I've described it as a return to normal, for lack of a better term. I think you think back over, the course of 2021, 2022, early 2023, what we had were some very, strong crop markets. We had profit margins that were very healthy through most of that period of time. Well, those have narrowed as we've, hit here to the end of 2023. And so as I talk to producers, it's not doom and gloom, but it's also not euphoria either. They're sort of settling in that, okay, things are a little rougher, but we're still in decent shape here. But they're also wondering is, are we done pulling back, going back to when you look at where prices are, today versus where they could be 6 months from now, which way are we going? And that's why the volatility in the market does have people concerned for the future. But at the same time, too, I wouldn't call it doom and gloom about it.
What's the biggest concern you're hearing from producers? Is it lower commodity prices? Is it the cost of inputs? Is it interest rates? All of the above? What are you hearing in those conversations around the state, Chad?
Well, that's the deal. It's all the above. I mean, I think when they're looking at pricing, for example, it's not that they're saying prices are really low. It's that, prices have come down. At the same time, too, they've watched their cost structure go up. They know that, when they go to get that operating note, they're going to face a higher interest cost there as well. And so it's just this, sort of a nick here and nick there. And you feel the pain in various places here. But again, at the same time, too, these are small issues that are adding together as opposed to one big issue, which is torpedoing the situation within the economy.
You brought up ag exports earlier too, and we've had a fair share of challenges here. The fourth quarter of 23 and moving into 2024, we're not in the greatest position. We got low water levels on the Panama Canal. We have issues with the Red Sea, the Suez Canal. We've had this rail closure here along the U.S.-Mexico border that's having a pretty big impact, backing up a lot of trains. We've had issues with the Mississippi River with low water levels. So, I mean, you think about the ag export picture here, and logistics are having a tough time here as we start into the new year, Chad.
They definitely are. And I'd say let's call that just another headwind as we look at trying to rebuild some of those export sales that we've got here. As you mentioned, the Mississippi River problems, we had them last year. We have them again this year. It adds to our cost of trying to reach those international markets. You combine that with, basically the global markets are all facing the problems in the Panama Canal and the Red Sea region. So it's adding to the cost of doing business right now at a time when most U.S. markets need to have those additional international sales. Because I sort of frame it up as when we look across most of our ag markets, domestic demand's solid, but I would argue it's stable. And so if you're looking for growth in 2024, it's more than likely going to have to come from the international marketplace. And so it's going to make these logistical challenges more critical as we move into 2024.
I think another thing that could maybe help some of that export growth here as we get into 2024 is the overall U.S. economy. The talk of rate cuts from the Fed. The dollar has been largely breaking lower here at the end of the year. The stock market's been setting new record highs. Your perspective on where the overall economy stands right now, the talk of interest rate cuts by the Fed sometime in early 2024. What's your take on that part of our economy right now?
Well, that's it. I'm fascinated by sort of what the Fed is saying and then how that's being translated by a lot of folks within the market. I think when you look at, what the Federal Reserve has indicated about what they see for interest rates over next year, it's true that when you look at the dot plot, it is saying that they're expecting some rate cuts as we look into next year. In fact, based on recent history, we would say we're looking at 3 rate cuts based upon what the dot plot. And everybody, sort of translating that and saying that's going to happen at the beginning of the year. Yet if you look at what most of the folks that sit on the Fed board are saying, they're trying to say, yeah, we think rate cuts are going to happen, but they're trying to push them later in the year. They're saying, right now we're just looking for stability. We believe that we have taken the interest rate high enough to knock inflation back down to where we need it to get, but we're not there yet. And I think that's the crucial thing as we look into 2024 is what do we see in the near term over the next couple of months about inflation, because that will set the stage on how the Fed actually does approach reducing interest rates if they feel they need to do that to try to stimulate the economy later in 2024.
So if I'm a farmer or rancher, we haven't touched on livestock yet. We'll get some notes from you on that here in a second, but just general risk management here with a lot of these unknowns in front of us in terms of the economy and interest rates. I mean, I feel like it makes it tough to make a plan, a marketing plan, and manage your risk here to some degree with a lot of these unknowns that are out there. Chad, can you talk about that a little bit? I mean, does it make it tough to make a marketing plan right now?
Well, it does, just because like on the crop side, you're coming from a time where I could argue throughout the last 2 years, especially thinking back late 2021 and 22 and even early 2023, I could argue you were always seeing prices that were above your production costs. That makes marketing easy. As far as any move you make, you're probably making money on that. Now, it doesn't mean you're making the most money you can, but at least you knew that you were in fairly solid financial condition. We look at the markets today. No, like I say, it's more around break even. Corn's probably a little bit below. Soybeans a little bit above. But the idea is it means that it's more challenging to necessarily capture that profit. But at the same time, what it does is it forces us to really evaluate the business. We need to pay more attention to cost than we have in the past. When you've always got a profit, you don't tend to worry about that cost creep that we've seen. Well, now you do. So now it makes sense to comparison shop, look around, see if you can find deals on your seed, on your fertilizer, on your fuel to try to keep those costs in check. At the same time, too, I think it emphasizes, hey, when you get a price that is above your cost of production and you're getting some cash flow off of that, maybe make that move instead of waiting for it to go 25 cents higher again. I like to sort of say that, when you think about marketing in agriculture, we tend to overemphasize what we've just recently been through and underplay what we've learned over our long history. And with ag, our long history is this is usual, where we're constantly pricing around break even. That means that, those little decisions do matter, and we do need to pay attention to them as we move through 2024.
Chad, before we wrap it up today, too, I want to get some thoughts from you in the livestock sector as we end the year. Cattle, hogs, it's been quite a ride this year. And I know, especially on the cattle side, we're waiting to see if this herd's going to get rebuilt in 2024. Hogs has been a bit of a dismal market to watch. I mean, you think about all these different factors with the economy and more, that's tying itself into livestock too. Any thoughts in terms of cattle and hogs here as we wrap up the year, Chad?
Yeah, as I look at cattle, I think the challenge here is, let's face it, that we had a big run through most of 2023, and then we pulled basically all that off here within the last couple of months. And it's because we are trying to figure out, when does this herd rebuild start? And I think all indications right now tell me it's probably 2025 before we start to get there. A lot of farmers had been sort of thinking about gearing up, but let's face it, the market was rewarding you. If you had that young heifer, she was coming up, and you could decide, okay, do I keep her and breed her out, or do I put her in the feedlot? Well, we're still putting her in the feedlot right now. The value is still being captured there, but that's going to have to flip sometime over the next year to start to rebuild the herd. On the hog side, you're right. It has been dismal. I mean, it's not that prices are bad. In fact, I could argue prices are good. It's just that costs are so high right now that it has made this an incredibly rough year for the hog industry. And it's an industry that's been trying to contract a little bit. If you think about what we've been doing on the breeding herd side, on the intended farrowings, we've been trying to knock those numbers down. But the problem is our productivity is just amazing right now. You look at the pigs saved per litter, and we set a record every quarter. We look at that data. And by adding those extra pigs with each litter, we continue to just sort of grow the hog, pork production up. And that's been a major challenge here. So prices haven't been able to move much to try to catch up to the cost that we face within the industry. And I think that's the challenge for the hog industry in 2024, is trying to get those costs back in line with where prices are currently at.
Well, great thoughts. Always enjoy a conversation. I'll wish you and yours a Merry Christmas and a Happy New Year. Chad Hart, economist with Iowa State University. Chad, thanks for joining us on the show today. Appreciate the time. We'll talk to you again soon.
Thank you.